And so the general idea is just to help you learn how we record the transactions in the T accounts, because it is these same T accounts that we're going to balance off. Once we balance them off, we extract a trial balance from the same, and then we'll talk about some of the the issues around the trial balance. So let's move on and we get to appreciate the trial balance. We know what a trial balance is, but the question of the day, where does it come from? You need that background, okay? So first of all, we need to learn that the business usually under every month, does transactions, like different transactions. So those transactions are usually recorded in different books, various books that we have, okay? So now those transactions, they get to be recorded. After they are recorded, you yourself, you should be able to observe what we call the dual concept, or like the double rule of entering the transactions. That is to say, for every transaction, there is the part that is giving, and there is also the part that is receiving. So there is someone who is receiving, or there is an account, to be specific, that is receiving, and at the same time, there is the account that is giving out for every transaction. So that's what you need to keep in mind. We just have to keep that in mind. So get to learn that whoever is whatever account is giving in the transaction, okay, we call that account giving. That's a credit entry, okay. Then the one that is receiving, that's a debit entry. So just get that simple rule. Give out, that is credit, then receive, that's a debit entry. Just like that. It is just as simple as that. So what do we mean when we say the T accounts? What we try to mean is that given these transactions,
So we can't hear you. You've muted your mic.
okay, I'd received a phone call, so I never wanted you to hear what I was saying. Okay. Anyway, so when you look at the transactions, let's look at this quickly, because that's what we just have to go through. When you look at these transactions, we are told to record the transactions in the T accounts. So what is there is that each of these transactions, okay, has got the two accounts. There's account that is receiving. There is also the account that is what? That is giving out. So the way of doing this is that, number one, you make sure that in each transaction, you identify the account that is giving. Then you also identify the account that is what? That is receiving. The one that is giving credit, receiving debit, just like that. So in each of these transactions, there are two accounts. One is receiving, the other one is what? Is giving out. So you will observe that there are so many accounts that are involved in all these transactions. So what you do when we say T accounts, you will start identifying the accounts one by one. For example, you start with for example, the capital account. The capital account here. There's also, we have the capital account. So when you look at the capital account, number one, That's the first one we'll start with. This side it has got credit. This side it has got what? Debit. What I'm trying to show you is where the trial balance comes from. Just observe. So the first question that you'll ask yourself in transaction number A, what is happening to the capital account? Is it receiving or giving out? Okay, anybody? Safuna starts a business and pays in 5,000 as capital. Is the capital account giving or receiving? Anybody?
It's giving.
Okay, interesting. Someone says the capital account is giving. What about others?
It's receiving since it's a capital.
Okay. So observe that when you pay cash, when you pay money, like cash into the business, it means that the business has got an account called the capital account. So you are giving the capital account that money. Okay. So in short, since you are giving the capital account, you are giving, it means that it is receiving. And which account is giving? Since it is receiving cash, it means the cash account is giving what? Is giving capital. So how do we enter this one? You enter on the debit side as cash. The capital account is receiving what? Cash worthy 5,000, just like that. I just want to make it this simple so that you just get it. And we move on to what I wanted to do. Did you get that?
Yes, sir.
Yes, sir.
Yes. Then you read the second transaction. You are just interested now in the transactions that have got the capital account because that's the account that you're considering, okay? Number one, the business buys a car for 1,000 cash. Is the capital account involved in this? Yes or no?
No.
The capital account is not involved, so the transaction will not be what? Will not be recorded. You skip. They buy goods for resale for 500 kwacha cash. Okay, which two accounts are involved in this? I think that's very important to learn to identify. Which two accounts are involved?
One of them is a cash account, sir.
Okay, the cash account is involved. What about the other one?
Purchase account.
Anybody? The purchases account, okay? We buy the things for resale. That's a purchases account. So you have observed that the capital account is not involved. Therefore, you skip the what? The transaction. You don't record it. They buy more goods for resale for 600 kwacha on credit from Mr. A. Which two accounts are involved? Anybody? Which two accounts?
Same as C. Just the same as C.
The same as C.
Yes, sir.
Okay, interesting. What about others? Hello. Let's revise.
On DPS, since they bought on credit, you can say, is it a payable account?
Okay, so you have got the purchases account, okay, for goods for resale, and you also have got the payables account. Okay, payables, it means that you owe people, okay, you owe your suppliers, then you are supposed to pay them. Those are payables account. So you have got the payables account and the what? And the purchases account. Therefore, the capital account is not what? Is not involved. You skip the transaction. So you will see that going down here, we don't have the what? The capital account. Therefore, the capital account ends here. Okay. So now let me show you how to balance off, because balancing off this account is very important, or closing the account, so that we can learn how to come up with the balance, the trial balance. So what you do here, you balance this what? This account. To balance off this account, it means that you are going to sum, or you're going to add both sides, okay? You add. And then the biggest amount to be recorded on what? On both sides. We know that this side we have 0, there is nothing. It's as good as we have 0. Then this side we have 5,000. So 5,000 is the biggest amount. We'll record it on both what? Both sides, okay? 5,000 and 5 what? 5,000, like that, okay? Then what we're going to do is, since there is 0 here on the lesser side now, that side which is lesser, you should add up this lesser side, okay? Whatever that amount is, subtract it from this 5,000. So we know that this amount is 0 in this case. The difference, like 5,000 minus 0, is just 5,000. So we'll record 5,000. That's the difference, as the balance what? Carried what? Carried it down, right? We'll record that as the balance what? As the balance carried it down. With the last month, with the last day of the last month. Take for instance, you are dealing with December. The last month of December is 31st. So the date will be 31st December. On the details you record balance in the folio carried down, then you record what? 5,000. Okay. Then this amount now, balance carried down, you record it on the other side now, the opposite side, okay? As the balance brought down with the first day of the next month. If this was 31st December, then this will become first what? January, okay? As the date, 1st January. On the details, you record what? The balance what? Brought down. And then you record that amount, the 5,000 on the other side, okay? As the balance brought down with the first day of the next month, okay? Or the new month. Then the balance carried down carries the last day of the what? Of the final month. Did you get it? Do I have a question there? Any question from anyone on how to close the account? Because that's what is more important here. That's what we are trying to focus on. Any question? You can still ask the question. Okay. If it is clear, then we can move to the cash account. Let's record what is involved under cash account, credit and debit. So now we are just concentrating on the cash account now. That's what it means. Let's start with the transaction number 1 again. Is the cash account involved in the first transaction? I think we have known how we check the accounts. Is it involved? Safuna
Yes,
starts a
it's involved.
business.
Yes,
So the question is the cash account giving or receiving?
it's giving.
Okay. Okay. What's the account that is receiving?
The capital
The
account.
capital account.
Yeah. So you record on your details. Capital. You credit. Okay. Capital 5,000. Now, one thing that I want to remind you is that we are talking about the issue of double entry. Okay. On the debit side, the transaction, one transaction will appear on the credit side and on the what? On the debit side, but on different accounts. Okay. Check that this same account, this same transaction is recorded on the credit side here in the what? In the cash account, right? But in the purchase, in the capital account, we recorded this same transaction on the debit side, isn't it? We recorded it on the debit side, this same transaction. So which means in this transaction, we have observed the double entry, okay, or the dual concept. Did you get that?
Yes, sir.
Then we move to the next transaction, transaction number B. We are just concentrating on the capital account. What is happening to it? Maureen, would you read now the B question? What's that?
Okay, the B says the business buys a car for 1,000 cash.
Okay. So what is happening to the capital account? is it receiving or giving?
It's
The
giving.
cash
Or-
account.
Or the cash account, sorry. What is happening in the cash account? Yeah, thank you. You're following. It is giving, isn't
Giving
it?
out. Yes.
What is it giving? Who is receiving? We're buying a car. All right, the motor vehicles account, right? The motor vehicles account is receiving, how much is this? 1,000, right? Yes, for the cars we call the account we call it the motor vehicles account, right? Not car account, or maybe what would I say? A tracking account, BMW account. No, don't do that.
So far, if you had to call it a car account, for example, in an exam, you'd lose marks.
Anyway, maybe depending on the way how the lecturer would want to be lenient or whatsoever. But usually those for the business, right? All the cars of the business, they are recorded in what is called the car, like the motor vehicles account, like all of them. Not the type, no, this is a car, this is what, like you just record them in what we call the motor vehicles account. Then all the equipments, right? They are recorded in what is called the equipments account or machinery account, right? You buy a machine, you regardless of the type of the machine you just call that the machinery account, for example. Yeah, you know those things. Did you get that?
Yes, sir.
Okay. Mr. Gifty, will you read for us question number, transaction number C? I think Mr. Gift is around today.
Sorry.
Yes, would you read for us question, transaction number C? What does it read?
On number C. Okay, where? They buy goods for resale for 5,500 each. Is that what? Or 500 cash?
Okay, thank
Right?
you. Yes, sir. Thank you very much. We just wanted you to read for us. Thank you. So, what is happening to the cash account?
It's giving out.
Okay, so what's the receiving account?
Is it the purchases
The
account?
purchases account.
The purchases account is what? It's receiving that same amount, which is a 500 what? Quarter. All right. Where is this one? Mr. Mape, would you read for us the next transaction?
Correct, sir. The next transaction is D. They buy more goods for resale for 600 kwacha on credit from Mr. A, Mr. Ariel.
Oh, thank you. So, what is happening in the cash account in this transaction?
It's receiving.
What
It's
is happening
giving
in the
out.
cash?
Sir.
Okay, what are the two accounts that are involved in here? First of all,
The purchases and the cash account.
No.
No.
No, we have the goods account. That is the general goods account.
okay.
Hello.
Yes, sir.
It's the payables.
On this one, the cash account is not affected because we're paying on credit.
Okay. All right, thank you. So observe that on transaction number D, you're buying on credit. So the cash account is not affected. The only accounts that are affected is the purchases account, which is receiving the goods, and the payables account, isn't it? Since you're buying on credit, it means the payables account is what is involved, isn't it? Yes, sir. So you skip the transaction. Mr. Shtuka, would you read for us transaction number E?
Sorry, sir, just a question before we proceed.
Yes.
Are we not supposed to record anything under the payables account? No?
Now we are concentrating on the cash account. Okay, you look at the account that you're concentrating on first.
Oh,
These are
okay.
just T accounts. We are concentrating on cash.
Okay.
So whatever transaction does not involve cash will not be recorded in the account.
Okay.
Mr. Shtoka, you can proceed, sir.
They pay rent of 200 kwacha cash.
Okay, thank you. What is happening with the cash account? Anybody?
It's giving.
Okay, so the cash account is giving to which account?
The cash account is giving.
To the rent account, all right? It is giving to the rent account. Rachel, read for us question number F or transaction number F.
Question F, they sell half the goods for 800 kwacha cash.
Okay, what is happening to the cash account?
It's receiving.
Receiving. Receiving.
Okay, what is it receiving? It is receiving from which account?
From the sales account.
The sales account is not receiving. When you make a sale account, it means it's a credit, right? The sales account, the goods are moving. You're concentrating on the goods. What is happening this way? Okay, so the cash account is receiving, all right? From what? From the sales account, right? The sales account is giving out the goods. Like you have sent the goods, right? Is it that you have sent the goods, then you have received the cash? There is silence in the land. You have sent the goods you have sold, then you receive cash. So the cash account is receiving the sales, isn't it?
Yes.
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 Okay. Mr. Mtambo, would you read for us the question number G? Question number G. Wa Mtambo Sylvester.
Hello.
All right, Mr. Simwanza Samuel, you can read for us transaction number G.
G,
Yes.
they sell the remaining goods on credit for 900 kwacha to Mr. X.
Okay. So what is happening with the cash account? Anybody?
It's not affected.
Okay, the cash account is not affected. Veronica
What is
Piri, read the
affected
transaction
is
number
receivable
H.
account.
Right. Veronica Piri, read transaction number H.
Okay, sir.
They pay 400. They pay 400 cash on account of the amount owing to Mr. A.
Okay. So which two accounts are involved here? The cash, what is happening with the cash account?
It's giving out.
Okay, it's giving what?
It's
To which account? It's giving to which account?
The payables account.
Okay, so it is giving to the payables what? The payables account, and how much is this? Just a 400 kwacha. Then they receive 500 from Mrs. X. What is happening with the cash account?
It's receiving 500.
Okay, so the cash account is receiving what? It's receiving 500 from which account?
The receivables account.
Okay, the receivables account, right? From the receivables account, it is receiving 500 kwacha. Rachel, read for us
Oh, sir.
question number. Yes,
So
sir.
before we go there, when
Yes,
you
sir.
say receivable, we can't use Mrs. X as an account.
And no,
Or
like
Mr. A as an account.
no,
Okay.
yes. Like we are not using like the individual's account, like the people. You get. You remember the three, the different types of accounts, right? We've got the real accounts. You remember the real accounts, the nominal accounts. What else? The personal accounts, right? The personal accounts, the real accounts, nominal accounts, you know those things. Yeah, anyways. So we are not using the individuals. We are checking those key accounts. Usually these are the accounts that are able even to reflect on the what? On the trial balance. You get on the trial balance, you can never see the names of people. Like as people, you can just maybe see the payables, the debtors, you know those things, right? Not really the name of the people, isn't it? Okay. Transaction number J, Rachel.
Safuna withdraws 100 cash from the business.
What is happening with the cash account?
It's giving out.
Giving out.
Okay, it is giving out the what? The withdrawals, okay? It's giving out the withdrawals of 100 kwacha. So from here, what we do now, we balance off this what? This account, okay? How do you balance off? Let's sum quickly on both sides. Let's start from the credit side. 5,000, 1,000, that's 60 what? 60,000 plus this is 1,000, 7,200, isn't it? Is it? Is it 7,200, right?
I think it's 7,000. I don't know, someone to confirm.
7,200.
Yes, 7,200. What about on the other side?
$1,300.
Okay, 1,300. So just for the sake of space, I've done this. So this biggest amount, 7,200 will be written on both what? Both sides, okay? 7,200. Then this side, you subtract on the lesser side now. Like 7,000 minus 1,300. How much is that?
5,900.
Hello?
5,900.
All right. So at is 9 what? Balance carried down. At is what?
5,900.
5,900.
5,900 as the balance carried down. Then you write it, you know that the date you're using is the last day of that month, the closing month. Then to the opposite side now, which will be the debit side now. You write it, the next month, this should be 1 January, since this was December. Okay, just check which one is the next month. If you close it in May, then the next month, January, it will be June. So you write this as the balance brought down the same amount, 5,900. Is that clear?
So just a question. Where do we write, or do we write the 1,300 anywhere? The total on the debit side. Do we write it anywhere?
No, it is not written anywhere. Okay, that's why when you're summing somewhere, maybe Pambali, so Chabe, you know those things, right?
Okay.
All right. Okay, so fast forward. So what is there is that all those accounts like these, you continue like identifying the different accounts that are involved in all the transactions. So you can see that all those different accounts are displayed here, okay? Like they have been entered already. I'll send you this document. They have already been entered here. So the duty is just to close the accounts or to balance them off. Once you're done balancing off the accounts, then you should be fine. So what I want you to learn from now is that once you balance off the accounts, I want you to learn that you need to target where there is the balance brought down, okay? That's what we just want you to concentrate on. Yeah, that's what we just want you to concentrate on. The balance brought down. Where the balance brought down is, that's why you concentrate on. And you know how your trial balance is, okay? The trial balance is like this. It has got the credit side and the what? And the debit side. Then you will understand that all those transactions, that after closing them, they have the balance brought down on the debit. If the balance brought down is on the debit, it means that for that particular account, you record it on the debit side of the what? Of the trial balance. Then for all those transactions, all those accounts, okay, that after closing them, the balance brought down is on the credit side. Then you record that particular account on the what? On the credit side. Then after that, when you sum, since this is double entry, you sum, the credit side will be equal to the what? To the debit side. Okay, observe this now. This is what I want you to see quickly. I'm ending soon. Spend hours. Just relax. Okay. What do you want to say? All right. Okay. So observe that this is how the trial balance is. Okay, this is your trial balance. Your trial balance is like this. To some of us who might not be aware of what a trial balance is, the trial balance looks like this. Okay, you observe that the debit side is equal to the what? The credit side. These are the accounts that we are writing. The sales account, the van accounts, you know, the purchases account, the rent account, the wages account, right? The debtors account, the bad debts. So what happens is that these accounts, with these accounts, the individual transactions were entered and those accounts were balanced off. After balancing them off, then they looked at where the balance brought down was, okay? It means that for transactions like capital account, which one is it? Cash account. It means that balance brought down was on the debit. That's why the cash account was written on the debit side. For the sales account, it means that the balance brought down was on the credit side. For the van account, it means that it was on the debit, just like that. Since each transaction is entered on different sides, you know, on the credit and on the debit. That's why the trial balance ends up what? Balancing. Okay. So now, these are the different, the question is this one. Suppose, can you suppose that you are given the 7 accounts? These are accounts, okay? Let's suppose that 7 accounts are the only accounts that we have in our books. And these are the accounts. We have the debtors, the creditor, and we have got the sales account. You also have got the purchases account, the cash account, the sales returns account, and the purchases return. So now check that these accounts are already what? They are already balanced off. Okay, they are already balanced off. So look at where balance brought down is. So for purchases account, the balance brought down is on the debit. For cash account, it is on the debit as well. It means that the purchases account will be on the debit side of the trial balance. The cash account will be on the debit side of the trial balance. Then the sales account, it will also be on the debit. The purchases return, oh sorry, not sales account, like the sales return. Sales return will be on the debit. And which one is which? The purchases return will be on the what? The balance brought down will be on the, if the balance carried down is on the debit, it means that the balance brought down will be on the what? On the credit. That is for the purchases return. So you'll observe that as we move on now, all those accounts, all those accounts, once you bring them together here in the, to make the trial balance, you'll understand that all those accounts that were, whose balance brought down was on the what? On the debit, they are the ones that are recorded on the debit side, right? They're recorded on the debit side. The purchases are here. Purchases return, it's on the credit side, and the which one is which? The sales return is on the debit, right? That's why where is sales return? 40 kwacha here. It is here on the debit. So ultimately, the message is those accounts whose balance brought down is on the credit shall appear on the debit, on the credit side of the trial balance, and those whose balance brought down is on the debit shall appear on the debit side of the trial trial balance. Clear? You have known where the balance carried down come from. This is where the trial balance comes from. Any question from anyone? Do I have any question? Hello.
It's clear, sir.
Oh, okay. So maybe just to mention one or two, three last things. Last things. Maybe I would say that sometimes maybe you might be asked to balance again the trial balance. Yeah, sometimes the trial balance may be given and it is not balancing. Then you are supposed to restructure the entries in the trial balance so that it can balance up. Okay, then you need to understand which entry goes to the debit, which one goes to the credit. Once you understand that, then yourself, you can manage to balance off the trial balance. Otherwise, there is nothing much about the trial balance. That's what is just there. Any question?
Excuse me, sir.
Yes, sir.
Yeah, in a situation whereby you are given a trial balance and it so happens that one of the entries is missing, and the trial balance happens not to balance. What can you do in such a situation?
Okay. What can you do if you are given the trial balance and then when you're recording, you find that the trial balance is not balanced because you have missed a certain transaction?
Yes, on the data that is given, there is a missing entry.
Okay.
What can you do in such a situation?
Anybody? There is a question coming to the class. What can you do if the transaction is missing? There is an entry that is missing and the trial balance is not balanced. Hello.
Yeah, I'm saying this because if you look at the assignment 1 that we were given in financial accounting, there was a missing entry. There was a missing entry.
Nish, the question, like, what's the direction of the question? Is the question asking you to balance the trial balance or what? Because yeah, what's the direction of, what's the commanding word? Okay, in short.
Just to complete the trial balance.
Or you are told to complete the trial balance.
Yes, yes.
Then you are given the transactions. Are you given the transactions?
Yes, we were given the transactions. All the entries were there, but when doing the entries, it was noticed that there was a missing entry that was making the trial balance not to balance. So in such